Just to give you a bit of a heads up with the briefing today, what I'm going to do is I'll give a bit of a recap of some of the news that's ongoing at the moment, but not going to dwell too much on the charts overall, because what I want to do is give you a bit of a macro update, because there's certainly a bit of a change in sentiment in regards to European politics. As you guys will remember, if you were trading back at the beginning of 2017, there was some really huge potential risks politically, France being the real headline risk, but then there was also the possibility of also this populist movement taking hold with the Freedom Party in the Netherlands. And as we know now in hindsight, neither of those events played out in a negative scenario. However, given some of the situation that's developed with this vote of independence by Catalonia that we saw at the weekend, this has now created a bit of renewed tension, I'd say, politically. And obviously this comes just 2 weeks or so after Angela Merkel has maintained her position, fourth term as the German Chancellor, but her party's popularity is at its lowest since basically the end of the Second World War. So this then prompting her to have to now forge a new relationship with two other political parties in this so-called Jamaican coalition, that of which isn't a done deal as yet, and probably won't be done for another few months. Could well be not until the end of the year. So this whole push, as we said before, of the ability of Macron, who's kind of the Euro golden boy, if you like, who wanted to bring everyone together and to the table for the better of Europe, has obviously been his progression severely hampered by the fact of what's happened in Germany. But quickly just looking at Spain, and then really what I wanted to bring your attention to was Austria, because I think this is something which not a lot of people are talking about in the market at the moment. So first of all, let's wrap up with Spain, where the Spanish IBEX, so their domestic stock index in Spain, did underperform yesterday in reaction to, as you saw, those violent scenes with Madrid stating that the independence vote was deemed illegal, and then the forceful actions that they took in that situation. Now, the peripheral bond yield spreads did widen marginally, but it didn't really affect the core, so it's very much really isolated to Spanish assets, but maybe then spilling over to neighbouring kind of sentiment related countries, so like Italy, which of course has its own political difficulties at the moment, and this is another factor to definitely contemplate over the next kind of 6 to 12 months, as they also have elections next year, don't forget. Looking at Spain, what's the latest that's happening with them at the moment? Well, the Catalan president has urged the EU to mediate after the independence vote. The Catalan president said after Sunday's vote, which as you probably well know, 90% of the people voted in favour of independence, Catalonia now had the right to be free of Spain, but he did hint that this would not happen immediately. This is no button to push for independence. It does not exist, he said himself in a press conference. So the kind of short of it really is, or the summary, reading some of the analysis that the banks have been putting out on this, is that overall this is going to be a long, arduous process of negotiation between Catalonia and Madrid, and so not really expecting this right now to escalate any further than really that it has, but it's something definitely to be monitoring. But this does play into the context of some of this political uncertainty that we've had, and when we start looking at the charts, this then explains. And although we've had a bit of a bounce this morning, I think the month of October for the euro dollar pair was really quite telling, because we've seen a big move from really 121.5 highs all the way down to, in the spot price, I believe we have actually traded below 117. So you've seen a big repositioning of fortunes, if you like, between that of the euro under political uncertainty and now dollar strength amid the hawkish Fed and also positive US data. But one of the other things that might further drive European political uncertainty is Austria. And this is one of the things I just wanted to give you a brief overview and get you up to speed on as an issue, because it might not be on your agenda as yet. Now, the reason why Austria is important is because we have the Austrian legislative election for 2017 that is in fact happening in only a couple of days' time. That's on the 15th of October. Now, for those of you who remember Austria, Austria was very prevalent in European politics in 2016. Why? Because there was a very close chance that we could have had one of the most furthest far right parties in European politics since the Second World War. That was in the form of this party here on the right hand side, the FPO. Now, actually, I believe if I remember correctly, it was so close, the first run of the presidential elections that we had last year, that they had to have a second round of elections. And essentially what happened in the end is that the Green Party won. So the Populist Party did not secure the presidential position. However, what this has meant is that this chap here, Sebastian Kurz, he is kind of, I guess, in this new kind of dynamic world of politics. He's a young chap. I think he's 31 years old. He sits on the centre right. The chap on the left here, Christian Kern, is the incumbent. So the SPO is the ruling party. FPO is the far right. Then the OVP is the centre right party. Now, one of the important things here about Sebastian Kurz is this. This is the opinion polls, and as they stand at the moment in Austria. Now, OVP, which is Kurz's party, look at the phenomenal rise that they've had over the last 3 months to really jump out to become the outright favourite to win in this election. Now, it's been quite interesting actually, and to give you a bit of background, the Austrian People's Party, the OVP, in which he represents. So some of the background here is that not ruling out a coalition, his party is what he said, with an anti-migrant, anti-EU Freedom Party, the FPO. So he said then, if we go back to that previous shot, he's not ruled out a coalition with the far-right movement. This obviously then starts to cause uncertainty about what this means then for the validity of the European ideology, given these far-right parties actually obtaining some power, which so far hasn't materialized in the likes of France and the Netherlands. Now, Christian Kurz has been quite clever about this, because what he's basically tried to do is try to pander to the far-right electorate to try and back him as a more centrist candidate. So Mr. Kern has adjusted certain policies to fit that far-right voter mould and has vowed to shake up the government in Austria and clamp down on migration. So, when we talk about European political uncertainty, and people have talked about Germany and they've talked about Spain now as some of the reasons why the euro has weakened in the last few days, actually the thing that's also on institutional investors' minds is the risk of potential far-right movement in the legislative election happening on the 15th of October in Austria. Not only this, you also have, if this was to take hold and we get a reignition of this populist sentiment or movement in the Eurozone, then obviously Italy is susceptible to that type of issue as well, and they of course have looming elections in only a few months' time themselves. So now you start to see the picture of how sentiment has turned slightly back to negativity when we start talking about politics from a European perspective. Now, one thing interesting that I did see, and if we were talking about the possibility that maybe volatility might pick up, the first thing we got to look at is what is the current state of volatility. And I saw this really interesting graphic. You might have seen me share this late yesterday evening. This was a measurement of the S&P 500 by index moves per year, and this is defined by color. So blue moves of 1% or more, red 2% or more, and yellow 4% or more. So looking at 2017 here, you can see we've not moved more than 1% on any day for the entire year. If you were to go back to 2015, 13, obviously the financial crisis was where we saw approximately 41 days of plus 4% moves in the S&P. Now that makes sense. That was obviously right in the middle of the most severe part of the financial crisis. But what I'm saying is this is the least volatile year pretty much in history so far in terms of the S&P 500. However, check out what October looks like as a month within an average period of a year. October, for whatever reason, does tend to be the most potential for volatility. If we were looking at more than 1% moves in either direction, it tends to happen in October. And so, just given some of these risks, renewed political risks I've just spoken about, this situation at the moment with North Korea, which isn't at the forefront of main key topics right now, but certainly is up there and can become a huge risk to the developments in the market should it escalate. And so there are potential hurdles that we need to navigate in towards to see out the rest of this year. So it's going to be incredibly interesting to see whether or not this historical patterns can maintain, i.e. are we going to see out the year as we have done so far with extremely low levels of volatility. I believe the VIX again was sub 10 territory yesterday, kind of reflecting this situation. However, is October going to live up to its reputation in that respect? Now, one of the things we had yesterday, I wasn't actually here, but I've just been looking at the data this morning, and I saw that ISM manufacturing yesterday came in at its highest reading since May of 2004. So if you're talking about this renewed movement in the price of the dollar, then obviously US economic data is lending its support to that move, in addition to the hawkish intentions that the Fed have had, commencement now of quantitative tightening, and also the rate hike now priced in for December. But just looking at this chart, quite a phenomenal print that we had here, right over the peak that we would have had. I guess this would have been just before or recovery of financial crisis, and then here we are back at the 2004 level. One thing though to keep in mind, and to keep expectations in check on this particular area of the economy, is a lot of people are putting this lift down to the hurricane, or hurricanes I should say. Harvey and Irma have lifted that data point. What they're suggesting as the reasoning here was that September in particular, disruptions to the supply chains caused by the hurricanes resulted in factories taking longer to deliver goods and boosted raw material prices. So most analysts are of the expectation that although this number will remain somewhat elevated, this is a one-off anomaly in terms of how high it is. We would be expecting a bit of a pullback, albeit still showing this trend which has been in place since 2016, which is an improving underlying economic performance in this particular measure. Okay, one other thing that we did see yesterday was a pretty big downward move in crude oil. This really initiated from the morning and it really continued for much of the day. It looks like here, just going back to the chart in the futures market, technically we broke that low, that kind of double bottom, if you like, that was printed at the end of last week. That snapped lower. We went through the various pivot levels and we had a run all the way down to find support around the psychological $50 handle, 50.06 to be precise, before the bounce took place. Now, why did we sell off? Well, first of all, it was very much technically driven, but then there was some fundamental news that followed thereafter that people have been looking at this morning. And this is the fact that OPEC oil output climbed in September as Libya and Nigeria start to recover. And so this is with Libya's biggest oil field returning to production over that period of which the data was capturing. So overall for OPEC nations, it was a gain of 120,000 barrels a day from August. If you're breaking it down, Libya, along with Nigeria, of course, which are exempt from the existing OPEC and non-OPEC production cut deal, rebounded 30,000 a day to 920,000 in September as the Sharara oil field restarted. Nigeria increased output by 20,000 to 1.77 million. Saudi Arabia themselves, OPEC's biggest producer, boosted production by 60,000 barrels per day. So they are now back above the 10 million, with neighbouring Kuwait lifting by 50,000. So compliance levels have now decreased in the last month back to 82% from 88%. So compliance is dropping slightly. So again, oversupplying the market, an excess of crude, and this kind of adding then a fundamental reason to supplement the technical break to really force prices lower yesterday. So that was yesterday's story. Obviously for the oil markets, we're looking ahead now to the API numbers, and we'll get the Department of Energy numbers to follow the day after as the next kind of reference point of inventory levels. Other things just to get you up to speed from a headline perspective, as I said, there's not really a great deal going on with North Korea at the moment. The White House ruling out North Korean talks. There does still seem to be a little bit of discrepancy in terms of the messages coming out of the White House between the Secretary of State Rex Tillerson and the President Donald Trump. The recent tweet, which I'm sure that you saw at the weekend, was Trump saying that the Secretary of State shouldn't waste his time negotiating with the little rocket man. Was what Trump said. Save your energy, Rex. We'll do what has to be done, was what Trump said. So again, to be monitored, this situation. And as I was explaining to some of the new trainees in their kind of macro lecture yesterday, and we were talking about North Korea, the market, as you can see, we were trading all-time record highs in the US equity market again yesterday in the S&P. So even though there is a huge repercussion if this event was to escalate to the point of military confrontation, the market still at this point is assigning an incredibly small probability that this will ever get to that point. And actually the fact that I've read some people's opinion this morning that the fact that Trump is not taking him seriously actually might be a net positive, because then he might not feel the need that he actually needs to physically respond in that way. Okay, looking at the calendar, just to get you up to speed here, is overnight we had the RBA, the Reserve Bank of Australia's interest rate decision. No surprises here. They kept rates on hold at 1.5% as expected. A couple of comments. They judged steady policy as consistent with growth and inflation targets. They said strengthening Aussie would slow economy and restrain price pressures. Overall, minimal real movement seen in the Aussie on the back of that. Not too much to speak of. Maybe a bit of a dip overnight, but it's already recovered by the point where Europe has come into the market, and Aussie DA6, your ticker on CQG, has already seen a recovery of the move and found some resistance at the pivot level this morning. Looking at what's to come, you've got from the UK the construction PMI, but actually from the UK, as you can see here, there's no central bank speakers from the Bank of England, but what I do want you to be very mindful of if you're going to be trading the pound is this afternoon. Why? Because this is the penultimate day of the Conservative Party conference, and today is probably the most important day of keynote speakers. As you well know, we had the Chancellor Philip Hammond giving the kind of keynote address yesterday. Well, today you can see here the timings. Now 2 o'clock to 3 o'clock essentially is when they're going to be talking about Brexit. Now this will be important because the Secretary of State for exiting the EU, i.e. the Brexit Minister David Davis, he will be speaking alongside the International Trade Secretary of State as well. You then also get Boris Johnson talking between 3 and 4. So a lot of the key movers and shakers of senior front benchers, if you like, in the Tory party will be speaking today. and those who have been very vocal on the Brexit issue. So between the times of 2 to basically 4, you need to be paying attention to the Squawk, to Twitter, to the news wires for any forthcoming information on the latest developments with Brexit. Just to give you a bit of an update, we have heard from the opposing party, EU's Michel Barnier, this morning, who said, quote, have not yet reached or achieved sufficient progress on divorce issues. So even this 4th round of talks, and despite Theresa May's kind of push in that Florence speech that we saw just a week ago, very little progress, if any, still has yet to be made. So today's going to be key to watch. Other than that, going forward, it's fairly quiet actually. Construction PMI, really it's the service figure we're looking out for from the UK, which will have greatest weight, and that won't be till tomorrow. And then looking ahead to the US afternoon, overall it's pretty quiet. There's no real major data coming out. Redbook, ISM New York, car data, these are all, I'd say, lower down the pecking order of their tiering of potential to have an impact on the market overall. One final point here on the calendar, it is German Unity Day today. That means that the DAX is closed. I would imagine then, actually Bunds are still open, but the DAX, so Deutsche Börse, I guess, is closed in respect of that holiday. So hence I've got the Euro stocks up here rather than my normal DAX chart and centre left, if you're wondering what I was looking at. Okay, so that's pretty much it. So to give you a quick wrap up of sentiment from this morning, I would say you've had a little bit of profit taking in the dollar after that extension of the run up that we had in Asia, and the gains that have been pretty much simultaneous days now, factoring in the hawkish Fed, the corporate tax plan, and the timings from Trump last week, and now the US data. But given such a quick rise in the dollar, a little bit of a pullback has given both major pairs a bit of a reprieve this morning. We've taken a bit of a bounce, albeit still in slight negative territory for the major pairs. I guess overall, though, for the fundamental reasons discussed, probably still be more favourable of a short entry in the euro currency. Maybe pivot might look quite interesting if we continue to tick higher, 118.08 type of level, that being around the resistance point that we hit yesterday afternoon before then the extended move lower. Likewise in cable, just having a quick look at the currency pair here. Again, it's been a continuation of a downward trend that's been in play, and so would still be more comfortable following that theme irrespective of the slight bounce that we have seen this morning. So would be looking for a bit of a further pullback to the upside, looking to reinitiate a short position, would probably be more what I'd be favouring here. What type of level to look at? Beyond pivot, probably that 133.72 would be quite interesting again, that being the resistance point that was seen here on the left hand side, but also the support back on late September as well. Equity markets, Euro stocks, as I say, slight positive, following on from the record high close on Wall Street. Pretty quiet overall in Asia. Don't forget Hong Kong open, but mainland China will remain closed for the entirety of the week. So not too much read across in Asia, and hence European equities opening higher. Not much further underlying fundamentals from a single stock perspective, so we've just drifted down in the Euro stocks to find some support or pivot. But with equities higher, bunds have continued to trend lower, sub-pivot. Okay guys, that's it. It's your morning briefing. Gonna leave it at that. So have yourselves a good day. Any questions that you might have, feel free to message me in the chat room. I'd be happy to help. Okay, thank you very much.